Hey guys, it's an honor to be here and introduce a very, very important and awesome lady. So I know many of you guys are entrepreneurs here, and I know many entrepreneurs in the space are all worried about where they get their money from, right? A lot of people focus on, okay, you know, once I get my money, then I'm good. Once I get my money, then I can go on and build whatever I want. Once I get my money, then I'm officially successful. But there's so much more than just raising money. Less than a third of companies that make it to their seed round and have a successful seed round actually make it successful in life. That means, you know, whether or not they go on to have an exit or go on to make it to a Series A. Well, a lot of seed investment companies, such as Zenfund, which is one of the largest ones in Asia, actually focus on growing the company, providing them with the advice and the expertise that they need to succeed once they have the money. You know, and so that's, you know, business skills, entrepreneurial skills, development skills, helping them, you know, get connected with the next investor and more teammates. And now, without further ado, I'd like to introduce you to Olivia Wang, who runs the US head for ZhenFund. Thank you.
Well done. Thanks. Hi, thank you. Thank you so much, Liam, for the introduction. Thank you so much, Victoria and the Berkeley community, Dion, and the organizers for having me here tonight. Also, happy Chinese New Year. Happy Year of the Pig. Woo! Also, I'm really excited to be here tonight because I think even though I didn't go to Berkeley, Berkeley holds a special place in my heart. ZhenFund has invested in a number of Berkeley professors and students. There's the Berkeley professor Don Sun, who is working on a blockchain startup. There is a bunch of CRISPR-enabled technologies discovered by Berkeley professor Jennifer Doudna. And we've also invested in a number of Berkeley PhDs who have gone back to China or stayed in the Valley that have worked on social networks, AI companies, et cetera. So part of the speaker series is about kind of me sharing how I got to where I am today. And in order to do that, I'd like to tell you about, well, where I am. What is ZhenFund? I think some people in the audience may be very familiar, especially if you've come from China, but others might be new to the fund. So in order to talk about ZhenFund, I've got to talk about this man named, whoops, sorry for the clicker. Maybe I totally messed up the clicker. But I need to talk about this guy named Bob Xu. So Bob started one of the first companies in China to IPO on the New York Stock Exchange. It's currently at a $13 billion market cap and is one of the largest education conglomerates in the world. And to talk about the significance of the company, I think it can be shown through this movie. So in America, we have the movie Social Network, which is, you know, showing Mark Zuckerberg and the founding of Facebook. In China, the one movie that is a large blockbuster hit is actually this movie with a very corny American title, American Dreams in China. As you can see, when it came out, it didn't do as well as Iron Man, but it did as well as Gravity, and it's one of the best-selling blockbuster movies in China. It puts Bob as a household name, which everyone really knows, in addition to his co-founders, Victor and Michael. And you can see Bob's social media presence is above Tim Cook, but below Elon. I think it's almost like the same as Elon at this point in China. Let's give Bob credit for that. More, sure, Peter Thiel, Ron Conway. And so after Bob founded EDU, and after the company IPO'd, he started to do angel investing in China. So between 2006 and 2011, Bob invested in over 60 companies. And these companies went on to IPO on the New York Stock Exchange and become unicorns, one of the first generation of startups in China. So by 2011, the founder of Sequoia Capital China, Neil Shen, basically saw Bob's track record, was very impressed, and wanted to institutionalize the fund. And so in 2011, ZhenFund was institutionalized as a partnership with Sequoia China. And so since then, so in the beginning, it was really a partnership between Sequoia Capital China and Bob. And we've basically come and done, over 600 investments, 15 USD unicorns. 5 of the companies we've led seed rounds in have IPO'd on the New York Stock Exchange, et cetera, et cetera. But I think, importantly, after Fund 2, we wanted to work with every later major fund, like Lightspeed, Kleiner Perkins, Matrix China, like all of the other ones. So Sequoia China ended up becoming an investor instead of a partner, and then we brought on mostly American investors into ZhenFund. The other thing about ZhenFund was its place in the history of the startup ecosystem in China. I know you guys will have speakers and have had speakers in the past about Silicon Valley, and I'll talk a bit about Silicon Valley as well, since I've kind of been here for the last 3 years. But first, going into China. In the US, there's a lot of really great seed funds. You guys may have heard of First Round Capital. Sequoia US has a great seed fund. There's Felicis, SUSA, et cetera, et cetera. In China, what happened is we're more like a YC, where one seed fund really owns early stage. Part of the reason that happened was because, after the Cultural Revolution, the Chinese educational institutions had to go through reform. And so all of the top Chinese people ended up studying abroad. And when these students who went to Berkeley and MIT, worked at Google and Facebook, when they came back to China, those were the people that were best positioned to start companies. And so because Bob helped send the last 2 generations of Chinese students abroad, when they came back, they often came to ZhenFund and Bob. And so we basically, as a fund, systematically thought about what is the best founder as a person. We really didn't care what they did, what their business plan was, what their market thesis was. As the first money into a startup, what we really cared about was what drives you? Are you passionate? Are you authentic? Do you have leadership skills? Can you build a team? Can you have a founding team where people complement each other? They're able to learn quickly. So these were kind of the foundations for angel investing in the beginning. And so Bob and Victor, and then now the rest of the ZhenFund team has really helped to formalize that. The other thing was, this was really the first generation of startups in China, right, from 06 and a little bit before 06. So back then, the angel investors weren't as founder-friendly. They tried to take maybe 30%, 50% ownership in your companies. They wanted the terms of the seed stage term sheet to favor the venture capitalist, not the founder. And one thing that Bob and Victor and the beginning members of the ZhenFund team did was make a term sheet contract that was just 1 page. And then the second legal kind of special purchase agreement was only 2 pages. So what we did was radically create these contracts that founders can understand, that were more like Silicon Valley. Because Silicon Valley, why the whole world really looks up to the Valley, is because there is a culture of mentorship, a culture of giving back, a culture of being founder-friendly, or at least aspiring to be. So basically, Bob and ZhenFund worked on that in the beginning. And so now we're at Fund 5, and we have 600 companies, which I kind of mentioned. So now, going back to myself. So I joined ZhenFund in 2014. I was the 7th employee, and we were just investing out of Fund 2. I grew up in Ohio, pretty much an American-born Chinese. And how did I kind of end up in China in 2014 with this Chinese fund? I don't really have much slides about myself. I'll just quickly go through it. First, I'd like to ask, how many people here are from humanities background? Higher? Wow, okay. How many people are computer science, STEM, etc.? Wow, most of the people here. That's really great context. How many people are interested in the humanities but are technical? Okay, that's good. That's good. I think, especially, in the age of Facebook, in the age of AI, in the age of blockchain, it's great to have that interdisciplinary approach. I'm a philosopher by training, so I grew up in Ohio in an all-white evangelical low-income community by Akron, which is where LeBron James grew up. And then I ended up, yeah, so it's kind of an interesting background. I ended up, getting myself into boarding school because I figured everybody else around me was going to community college. So I went to Andover, where there was a professor who was teaching at Harvard Divinity School who came over and started teaching me philosophy. And then at Hopkins, I studied under a political philosopher named William E. Connolly, who taught me Nietzsche, Foucault, Habermas, Deleuze-Guattari, all of the French and German postmodern thinkers who think about time, becoming, causality, etc. So you guys are so much better positioned than I was, because I was literally a philosopher that knew no science and ended up in venture capital. So you guys are like already 10 steps ahead of me. But I guess part of my story is like, how did I get from there to tech? And so I think, after Hopkins, I did time at Credit Suisse because I've always been interested in US and China. And then a hedge fund manager. So at Credit Suisse, I was like a stockbroker. Like I was super introverted in college and did nothing but read dense philosophy books, but I ended up getting hired as like a salesperson where I was supposed to like drink whiskey with the hedge fund managers. So that was a very interesting experience. I pushed myself. It's great to push yourself in life. It's great to try. And then there, I talked to the hedge fund managers, and they started to tell me about Bitcoin in 2012 and 13. So what happened was I got into Bitcoin, in part because I read so much philosophy. When I read the Bitcoin white paper, it kind of made sense. And then I just went to China in 2013 and joined a Bitcoin exchange. And so, so basically that's what I did. I got my first startup experience in China at a Bitcoin exchange. It was backed by Sequoia China, and it's the second largest in Asia, called Huobi. And I built our first relationships with Coinbase, with Circle, with Kraken, and I absolutely loved being early in Bitcoin in 2013 and also being a part of a startup. And basically how I ended up at ZhenFund was Bitcoin started to become illegal in China as a method of payments, and I really didn't want to get in trouble with the Chinese government as a US citizen, and so I decided to join a venture capital fund. So in 2014, I ended up flying US, China every month representing ZhenFund, and I helped to build out our US programs because we had already connected with a lot of the Chinese community who wanted to come back to China at Berkeley, Stanford, MIT, as well as working with Facebook and Google. And the other thing that happened was, with Alibaba's IPO, Silicon Valley started to get interested in China. And Bob, given his status as an angel investor, started to get to know like Ron Conway and Joe Lonsdale and a number of the Silicon Valley entrepreneurs and venture capitalists. So we started to write 100K checks with SV Angel, Formation 8, Andreessen Horowitz, et cetera, testing out the theory of can a Chinese fund build a trusted relationship in the Valley, localize, and grow. So, a lot of my experience has really been about cross-border investing. How do you tie crazy frontier technology like blockchain with the idea of a global community of investors early stage? And so part of the joy of being an investor, in a way it was like a breakup. I was so into Bitcoin and I loved it so much, but then I couldn't really do it because it was illegal. So I went into I went and came into venture. And the beauty of venture is you can do different things at once. And I kind of turned on my philosophy hat and thought, what are new exciting platforms that emerged? And so the other thing I found very interesting was something that Berkeley discovered, which is CRISPR, basically a very powerful tool for gene editing. And I discovered kind of biology as well and other types of enterprise tools that were really disruptive. So in my role as a venture capitalist, I was able to explore and kind of expand my worldview in a way that I hadn't before. And so whoopsies, I apologize, I just did that again. How do I? Thank you. Anyway, so ZhenFund was in early a number of the Bitcoin companies. So like Huobi, which is the top 2 largest Bitcoin exchanges in China. Besides Binance, it's really Huobi. We are in Definity, which Andreessen and Polychain put hundreds of millions in as another Ethereum competitor for layer 1 protocols, if you're ever in that space. We also did a company called MyCoin, which is Taiwan's largest Bitcoin exchange. We did all of these in 2013 because we believed in really good founders, and even though we didn't know that Bitcoin was ever going to be a thing. The other thing we started doing was invest in tools for biotech companies, and we tracked really great engineers and saw where they were going. And a lot of great engineers, besides some random ones who are going into blockchain, were going into biotech. So we've invested in a number of companies like Synthego, which is 2 SpaceX engineers who created a system for making RNA and engineering cell kits. We invested in Transcriptic, which is also like a robotic lab that automates all of these laboratory experiments that people used to do by hand. We invested in Ubiome, which is like a 23andMe for your gut bacteria, and a number of other things. This is kind of just like some of these ideas. Sorry that I did not organize my slides in the best way, but I think in general, taking a step back, this vision and this journey that we've had is about, we're kind of in an interesting time in US-China relations, in the world in general, where there's more polarization. And I think in some ways, it's okay and understandable that some technologies need to be developed separately, like chips or some parts of AI, some types of quantum computing. I think it's understandable that there's a bit of a sensitive nature around them. But in other areas, because of the importance of data at an early stage for companies, global collaboration can only help them, like public health or healthcare plus AI. In China, there's more patients with liver cancer or lung cancer. There are just more patients in general. So having a US company partner with hospitals in China to enable US AI companies get more data is one thesis that we're very interested in. That is one very important application in the cross-border context. Another is obviously in the blockchain space. In China, all of the exchanges, all of the miners have kind of come out, but the US still has the best infrastructure and liquidity. So being able to connect these 2 worlds in blockchain is extremely powerful for the advancement of blockchain. And there are also many models that one can learn from. For example, in China, podcasts are a multi-billion-dollar industry that people really pay for. Paid content is much larger, and influencers monetize much more. And in the US, we've started to see hopefully this will emerge where influencers and thought leaders can be paid more directly, and how does that work? And so a lot of the learnings in China can also influence how we see trends are coming in the US. So I just wanted to give a quick overview. I know I took you through many different kind of topics over the span of 15, 20 minutes, but I'd like to make this more interactive and see what questions and comments you have. So thank you.
Yeah, Olivia, I have to say that was glorious.
Thanks.
So although we plan to do a fireside chat, a couple things. We saved some places in the front, and even, I know it makes you all feel awkward, but if you want to start to get out of your comfort zone, if you're sitting on the floor in the back, come on up front and have a seat, and then you can feel like you're even part of the party up here. So feel free to come up and do that. And Olivia, I'm going to ask you to sit over here.
Okay.
Hold on. I'm going to do this without. There we go. So Swetha, if you don't mind, what I'd love to do, I've got some questions to ask Olivia, but if you all, as we have a conversation, if a thought comes to your mind, I feel like we're all so planful and so worried about what we're saying, at the expense of being unplanned for you, sorry, Olivia. Mm-hmm. But if you have a question that comes to mind, just go ahead and raise your hand. But one thing that is helpful, I think it's fascinating how much you were talking about ZhenFund and what you've done there, and then you have that one slide that says journey, and then you did talk about it a little bit, but I mean, we are all, or not we, me, but you all are all starting your journey. And I am just curious to hear how, you're obviously a very planful person. You got yourself into Andover from being in Ohio. Andover, if you all don't know, is a boarding school on the East Coast, probably one of the top boarding schools in the US. Not an easy place to be, probably. But I am curious to know why you decided on Johns Hopkins and a little bit about your journey there and how you, like what you did besides philosophy, maybe nothing. But if you could talk to us a little bit about how you got to Johns Hopkins and the beginning of being there. Because Johns Hopkins is outside of Baltimore.
It is, it is. Sure. Well, I do a lot of dance and ballet. I'm the oldest of 4. I guess those are things I do outside of philosophy. My father moved back to China when I was a kid, so I spent a lot of time between the US and China. I was really interested in like the inequality, so I spent a lot of time volunteering in schools in China. I decided to go to Hopkins in part because it had the best international studies program, and I think from then I already knew that I wanted to be involved in like a really good community. I got into Middlebury. I don't know if you guys know where it is, but it's in Vermont on top of a mountain, and they play Quidditch there. And I just thought I should be kind of near DC.
Was that a positive thing or not a positive thing?
Not a positive thing for
Quidditch,
me.
okay.
I didn't want to be like on a mountain, yeah. But yeah, I did a lot of work in think tanks as well. New America Foundation, got accepted to Council on Foreign Relations, but chose New America Foundation. But I think I just followed where great people were. So Hopkins, I kind of knew that there were these professors that I could work with, or there were other people that were involved with US-China. I think at Credit Suisse, I got into this team with 7 managing directors, and I had to really work for all of them, which also meant that they would have to mentor me and train me. So one thing I've always done is like go to places where I could really learn from the best people, and then there was like a team that you knew was there that would teach you things.
How do you think how do you identify somebody that you think for you would be a best person? Like what kind of traits, what do you look for?
I think it's also about the structure of the team and like asking people, like people who may have already gone. It depends. Like from Hopkins and Credit Suisse, like it might be slightly different. But when I looked for internships, or I was looking at classes, or I was choosing my job, I would ask people like, what is the team dynamic? I would kind of observe like how people would work together. Mm-hmm. I think those things. And if people said, this is a team where people really care about collaboration, because you go into these environments and they're very prestigious, but there's very little interpersonal interaction, there's very little care. And really knowing, that people will invest in you, even if it's like through word of mouth or you've heard where the structure is set up, to know that you're in a community that will invest in you, I think is very important.
So it's interesting to hear you say that, because one of the things that you talked about when you're talking about Bob and how he set up ZhenFund was you never talked about the product. You didn't talk about minimal viable product. You just talked about the person, their leadership skills, their team building skills. Are there, there's something about that value that obviously attracted you, that you knew was important to you in college and then attracted you later on. Are there other venture capital firms? I think we actually had a student introduce somebody who's a venture capitalist as not quite sure, like something like a money grubbing maggot or something like that. So not always the best reputation. So it's really unusual to hear you talk about the focus on people. Are there other VC companies that you feel like have that kind of focus on the leadership and the team building quality and the collaboration quality of the startup that they're investing in?
Yeah, actually in a way, it's a really nuanced question, and it requires a nuanced answer, which I'll try to break down. I think venture is going through a lot of change. You guys may have heard of SoftBank raising a $100 billion fund, and their minimum investment check size is literally $100 million. That's the smallest they can go, and that it doesn't even make impact to them, which is insane. And so what is happening is there's so much money now in venture capital, and venture capital is becoming so competitive. And people like the average check size even for seed, before it might have been like $1 million, now it's like 4 to 5 million. It changes like the whole landscape of how venture capitalists look at startups. So I think that's one thing, and because everybody is writing larger check sizes slightly later on, it does push the market to look more at like your team, your product, your market traction and thesis. And because it is so competitive now with so much money, I think the days of like just betting on that person still must exist, but thesis and specialization in blockchain, bio, enterprise, consumer is becoming more prevalent. So I do think like in general, many funds talk about the founding team, but now it's even harder to do so given the amount of capital and the need to invest more money later on. I think to a degree, like everybody must think about the founding teams to an extent. Like the Collison brothers, right? Like the founders of Stripe. They're just amazing founders who dropped out of Harvard and MIT that, really from early on really impressed people. Or like Elon Musk. Obviously, maybe it's 2020 hindsight looking backwards. I think the other thing about China is it's much more about business model innovation. So like the e-commerce companies are really big in China, the payments companies, the social networking companies, the consumer companies. So these companies, they're really large and they pivot. So the founders, it's like they try one thing, it doesn't work, they try another. They try another thing, it doesn't work, they try another. And so you're really betting on people who can change quickly and navigate like the local kind of street smart savvy in China. And so for example, ByteDance, Toutiao, they're like one of the largest privately owned companies now. They also just took a news aggregator and just pushed it to the extreme to where now Baidu, Alibaba, Tencent are kind of fearing its like rise, right, in prominence. That's really based on a founding team. But I think, yeah, it's a hard question to answer. I think in the US, like when I talk to seed funds, like first rounder SUSE, I do think everybody does care about the founders. I think that is prevalent, but probably coupled with like a market analysis and a product analysis. I think for us too, we look at market a lot. Like if the market isn't huge, no matter what you do, it's really hard to like own that market. So if you have an amazing founder, but the market is only like $200 billion, it is really hard in China to like go beyond that.
Are there any companies who you think have been very creative in how they define their market?
Yeah, I mean, I think this is a controversial, it's not super controversial if you're not in biotech, but one company that I showed is called Synthego. Founders Fund just led 110 million Series C in the company. When I invested, it was like right around the Series A. And a lot of biotech companies, biotech funds told me not to invest because at the time they were just making RNA. And at the time, RNA was a 300...
Can you define RNA?
It's ribonucleic acid. Basically, it's like for gene editing, you need RNA. And that time, like gene editing was really first discovered. And that market was only $300 million. It was really tiny. But like basically we're betting that like, gene editing, gene therapy would grow. And so like the market is gonna grow. So, we made a bet and invested in that company, even though at the time gene editing was very small. So sometimes like markets can grow really quickly and you don't know. I think at the time I looked at some of the fertility companies and I thought the market was too small, but now I actually think there's a lot of ways you can expand the fertility market. Yep. So yeah.
I wanted to ask you this before, so it's a little bit out of sync, but since I'm out of sync, I'm just wondering, yeah, go ahead.
So when you start doing looking at new markets, what are some of the resources you use? Oh, hi. So my name is Mahek. Thank you so much for coming and talking. One of my questions is, so when you're looking at investing in new markets, it's really important to become kind of a subject matter expert so you are able to, speak to those investors at their language. So what are some of the resources you use to quickly be versatile and learn all these new markets really fast and then kind of have a projection for its growth rate?
Sure. I think that's a great question. There's a few things. Number one, I think as our investment team grows, we hire kind of experts. Like we've brought on a healthcare specialist who has decades of experience in healthcare. One of the companies we invested in IPO'd at a $3 billion valuation. It's like the Sephora of China. That guy is now one of our partners, and he knows everything about e-commerce. So, one thing is like, obviously the team, the partnership of the fund is so important. Another is just like, once you invest in your portfolio companies, you build like deep relationships with them. They give you feedback. You have your own network of experts that give you input. But I think one thing that we talk about a lot is like, it's kind of radical, but in China, one thing we talk about a lot, in part because we own so much of the seed market, like we're the largest consolidated seed fund, we like to just bet in amazing people that have big visions when you hear them speak, and we try not to think about the trend. Like, in 2013, we invested in 4 random Bitcoin companies, and we had no idea like how big it was going to be. And then Bitcoin blew up. But if we had invested like last year or the year before, that would have been too late. When people started to understand the market, we really invested in the very beginning where we tracked the smartest people and just place bets on those people. Similarly with AI, we started to invest in Google people who wanted to come back and be with their families in China, people who built like Google Glass, or the people who really worked on natural language processing. One of our companies is called Moboy, which is one of Google's first investments back into China. And Google launched their Android Wear with Moboy. They were the first natural language processing platform used in chat in China. That time, we invested in them like before they decided to quit their jobs and go back to China. We just believed these people would kind of create big markets. So it's kind of like a fine balance because ventures change so much too.
So I'm listening to you, and I appreciated that question because you are so fluid in how you talk about these companies and whipping back and forth between AI and Bitcoin and cryptocurrency and biohealth. I am curious, and it sounds like you're talking to people a lot, and that's where you got a lot of information. But you also said that you're kind of an introvert, and well, you didn't say that, but I'm assuming that. I apologize. I'm assuming. But like, what do you have on your nightstand? What do you read? Like when I assume that you do that.
Yeah.
Is it stuff like Dummy's Guide to Cryptocurrency? I don't know.
Yeah. The things on my nightstand change a lot over the years. Now I put on Netflix to turn off my brain because there's just too much.
What are you watching?
Guilty. It's really embarrassing. I've never watched Friends before. So have you guys watched Friends, right? Was that like way too old? I don't know. I never watched Friends before, so I'm watching Friends now.
There you go.
Kind of embarrassing.
Actually, that is so refreshing because it is really intimidating to hear you talk about stuff. I'm wondering if you could talk a little bit about your day. Like, when does it start? What do you do in a day? Because I'm then going to ask you to take a step back and take us through what an angel investor is versus a venture capital company. Sure. But if you can just talk about your day today.
Sure. And I guess seriously, I do love podcasts. Like, I love Kara Swisher's podcast, Recode. I love Andreessen's podcast. I love gene sequencing podcasts. And I love reading The New Yorker. I really like The New Yorker. Such a fan. So those are my things. I like action science books, like Bad Blood, and then like the book about the Silk Road. I forget what it's called, but I read it. What is it called?
Did you? So I read from a book called Neuromancer. Have you ever read that or heard of that?
I have heard of that. Yeah, sci-fi. Yeah, I just
2 people in the class then.
Yeah, Brave New World. Yeah. I like to read fiction that helps us think about the future too. I do love that. And then my day-to-day, it changes a lot because for my first 2 years at ZhenFund, I flew US-China every single month, which racked up a lot of miles. And then the last 2 years, I've been flying US-China every other month. And some of the things are seasonal, like JP Morgan Healthcare Conference is the largest healthcare conference. Consumer Electronics Show is huge. You've got YC Demo Day in March and in August. And then like November tends to be like a time with like a lot of events. So I try to segment my days and my months into like really intense meeting with founder deal sourcing days and months, and then time for reflection, et cetera. So like in a week, every single investor will do it differently. But I think what I try to do is like, I try to meet with teams and meet with other investors like 3 days a week. And then for 2 days a week, I try to do a little bit more of reflection and internal discussions with our team, things like that. Because especially when I was building ZhenFund in the US, one thing you have to do is build trust with the other investors and show to the Silicon Valley community that you want to be here and give back and be a part of the discussion. And I think Silicon Valley is just an amazing ecosystem where people really respond to that, you know. So part of it is just meeting with like a lot of the tier 1 investors, then helping out your founders. And the fun thing about me is I love like playing, I don't know, firefighter. It's like, oh no, like, I don't know if I'm gonna get this term sheet, or oh no, this investor is like being really mean and might pull this term sheet, or I really needed to hire this guy and I haven't been able to hire him forever, you know, and then they just call you and you try to help out. That's really fun. And then you get those calls like at all hours of the day and you never know when, you know. So those are really fun when your portfolio companies call you randomly. It's kind of annoying because you never know when for me, but that's always very like satisfying too.
So we know that you're working with portfolio companies, that you're investing in companies. Can you talk about what I think you described ZhenFund as the Y Combinator of China, but I'm
sure Y Combinator later stage, like seed, but kind of idea, yeah.
Can you just take us through, because we haven't had anybody who's talked about venture or angel funding at all. Can you just take us quickly through what stages there are, when, who to look for?
I'll do my best because it's also changed a lot. There are more stages now than before. Before there was like seed, series A, B, and C. Now there's like the angel stage, the pre-seed stage, the seed stage, the post-seed stage, the pre-A stage, because now there's so much money in the Valley, there's like more stages, so venture capitalists can come in more. Let me just focus on our original stage, because we started off as an angel fund, but now we also do like Series A and Series B. And some funds do that when they're really successful. Like First Round started off as a seed fund, and now they do Series A. YC is an accelerator, which is a different model, but they also have YC Continuity, which is basically a later stage fund that they hired Anu and one other gentleman to run, and they're amazing too. But basically, when you're early, what you do is like you actually scout out really talented people. So like our founder went to Stanford MBA, went to Stanford, I'm sorry, I feel like that's not a good place here. But you know,
we're in the Valley, so every place is a good place. We all work together.
Yeah, that's good. I think for angel, it's really like understanding really good talent. Like if a company IPOs, like a lot of those engineers might leave and want to start their companies. You know, sometimes people stay at Google for a very long time. They've led a division for a very long time, and they just really want to do their own thing. So in angel investing, what we do is like follow the flow of the best talent. And one shift is like before, a lot of people would just like, you know, graduate from their undergrad and start a company, and it would be amazing. Like Mark Zuckerberg and Bill Gates and Evan Spiegel, sometimes they drop out and they just go. I think now, because social has become more mature, it's harder to kind of like beat Instagram and Facebook. But so like a lot of the new companies are in healthcare or in enterprise SaaS, and these companies require people with a little bit more experience. So I feel like everybody's kind of shifting their focus to like industry veterans and kind of stay in touch with them to see when they start their company. And then basically for the seed, you want to, like, if you lead a round and you take a board seat, you like own like 10 to 20% of the company. And then, you know, I think every venture capitalist and every firm has a different style. Like some people are like, you should switch your CEO, you know, you should hire this way. I think every venture capitalist has an approach. In general, like startups, when they're starting, have trouble hiring like really senior people to help them scale the company. A lot of people have never like had to hire 100 people in a year. Like these are very difficult things that hopefully your venture capital firm or your seed stage firm can help you with. I hope I've touched on some of the things.
So when you're an angel investor is someone who is right after your parents have invested in you, then you can go to an angel investor maybe. I mean, it's very, very early. But an incubator is then the company or the group that's going to help you and possibly give you some money also. I'm not sure where everybody is on what level, so I just kind of want to go through that a little bit. And then once you start going, you can start going through your seed you go to an accelerator after an incubator, and then you go to your seed funding.
Sure.
Kind of. So just so everybody knows. Sure. And so ideally people want to be in an angel investor or very early level of a company, because the earlier you're in, the more risk you have and the more reward. So it's a real sweet spot to be in if you can spot companies.
Sure. So for example, like Y Combinator, what happens is like they basically take the money at a very low valuation because they basically promise you a lot of help and services, right? So YC publicly, I think, I think it's public. Like they put in a small money, like a few $100,000. They take more significant ownership than most angel funding. And then they have, the 3-month boot camp. And then they introduce you to other investors. And then, Paul Graham and all of the partners, they kind of mentor you. That's a choice that startups make to go through an accelerator, which is kind of like a university. They take a lot of ownership. A lot of startups also choose not to do that because the accelerator usually, like YC, takes a lot of ownership. So you get your equity taken out more earlier on. So some people choose not to do that accelerator. And then I guess with angel and seed, there's all different types. A lot of ex-founders, really great entrepreneurs, they're angel investors. And some angel investors, they just like to put in a little bit of money before seed funds invest. And then I guess seed funds are more institutional. But there are all different types of funds. Some have ownership mandates, which means they really want to be the lead and take 10 to 20% in your company and do the whole package. Other funds want to co-invest, so they don't mind not investing a lot. Because basically when you do your rounds in the early stage, there's a lot of different ways you can go. You can have angel money, you can have seed money, you can have 5 angel funds, you can have 5 seed funds. There's just a lot of ways to pair early stage capital in the beginning. I hope that's clear.
So we get go ahead. Oh, there's a question back.
Oh, hi, I'm Adam. This is kind of bringing it back to your journey and kind of your professional development. I'm curious, I can infer just kind of from the way you described it, how you kind of leveraged your relationships throughout your time at Johns Hopkins and at, what was your boarding school?
Andover.
Andover, right? But did you ever find yourself kind of chasing internships? Or kind of getting in the state of mind where you're kind of if I want to step up the ladder, I'm going to have to chase this internship? Or did you kind of just leverage your network throughout your earlier career kind of thing?
I think that's a really good question because I know internships are insanely competitive and everybody has to recruit and you have to go through the same cycles. And I see so many of my interns do that. I think both things I do and I juggled. For example, I wanted to get into Brookings Institute and Council on Foreign Relations, which are the most successful think tanks. And that was really competitive. I went through a very intense recruiting process for those. And college I think is very intense where everyone has to apply. For Credit Suisse, I was insanely lucky because I was the only person that didn't have to intern and recruit to get in because they needed a Chinese speaker who could deal with the CEOs of the Chinese IPO'd companies, who could also talk to the American hedge fund managers, and there was just no one for that. So when they found me, I just fast-tracked in. But when I went in, I went through a grueling process of getting licensed for every exam, and that was very competitive and hard. So when you recruit, I feel I built this institutional knowledge. I got into Credit Suisse and I was trained as a salesperson and I learned how to be professional. But then in other parts of my career, I really thought, what can I do that's better than like, what can I do that's much better than other people? What are my greatest strengths and what is most authentic to me? How do I play by my own game? And that was discovering Bitcoin, taking some risk, doing some startup stuff, So I don't know if that answers your question. I totally empathize, and I also have thought about it a lot in my career. And I feel like sometimes when there's nothing else but to recruit, that's really great. And other times, I think being reflective, talking to people who aren't your peers, who have had unique journeys, help open up your mind. So I've always actually kept a career diary where I draw webs of what I want to do, what I'm interested in, what are my strengths, what are my weaknesses, and visualize it. That way I'm not always on that rat race. But I think it's also important to have that training at some point of your career.
Can I expand a little more?
Sure.
So would you say maybe in terms of time, do you think it's more useful to try to foster very deep relationships with mentors and industry professionals in the industry that you're interested into going to, and kind of making those relationships and maybe working with them on projects and stuff? Or would you say it's more important to kind of full steam ahead on an internship?
I think it depends on how well you know yourself and what you want to do. It's totally okay to not know what you want to do. It's totally okay. And when that's the case, it might be hard to build deep relationships with mentors and find those things. That might be the time where you have to kind of network and just meet a lot of people. And then there will be times where you just really want to go deep into one thing. So I think both are useful, and it's just deciding what time in your life is it for that.
Gotcha. I appreciate it. Thank you.
Switch up here, and then we'll go back.
Thank you. My name is Badr, and I appreciate your thoughts and insights. I have two questions, if I may. The first one pertains to the last thing you said in your talk, and that is, what factors makes the podcast and influencers market in China greater than the one in the US? And when you said we're trying to leverage it to bring the same power to the US and to get influencers to be more directly, easily paid, how do you envision that? And then on the other angle, if I may, if you could talk about how the investments you make in different businesses, if you think about them, how they may solve inequality, and if that is a consideration that you take.
Sure. As I have mentioned, my focus is more on blockchain and biotech, but I will do my best to speak on paid content. I feel like my team might actually add more insights than me. We invested in two companies. They're both north of 500 million USD in valuation, and you do pay to listen to the podcast, or you do pay to listen to the influencers. Also in China, there are Quora copycats, Chinese companies that literally copied Quora. There's two of them, and you actually have to pay to read the Quora answer, and they're very good businesses, like Finda, if you guys know. I think it's hard to say. I think in general, payments is more advanced. And so the payment infrastructure is one reason. China just has much better micropayments. And I guess I think there's just so much noise, that that paid content kind of arose earlier. I apologize because I'm not an industry expert. Right now, what we've seen is just kind of there's so much noise in Chinese news, kind of having the influencer come out more, and the first kind of demand for that came out in China, and then the payments infrastructure also helped. But I feel like our team that does content can speak more about that. I think in the US recently, there's been some acquisitions in media that have been evolving around podcasts. I know this week there was actually a major one. It's slipping my mind, but this week there was a major acquisition between a media company and a company that has substantial podcast reach. And then there's been noise generated about US-China comparisons there. Sorry, what were your other questions?
Solving inequality. Just solving inequality.
Okay.
But how are you, maybe, go ahead.
No, in that regard, if the investments in the seed funds in the certain companies you look at, is it one of your values, or do you take into account how those might help solve inequality?
Sure. I think venture capital is really based on returns, you know? So like, I think my cold, hard answer would be like, we invest in anything that really makes a return on our investments. Because, you know, venture is an extremely risky and competitive industry. And when you like are required to make outsized returns and all of your returns are so risky, like, you really have to be focused on generating money. I think like that's almost like the cold hard truth I've learned. Like venture just requires outsized returns. That being said, I do think a lot of the investments we make are going to unlock value for people. In healthcare, for example, there's just so much innovation in healthcare that it's just really exciting and inspiring, or blockchain in terms of privacy. You know, those things will unlock a lot of value. But there's impact investing, and now Bill and Melinda Gates, Zuckerberg, Chan, they're actually starting to become more venture-like. And there are mission-driven ones. I think for us, like, we can't have the message be mission-driven because of our responsibility to our shareholders. But that doesn't mean, like, personally, on the investment team, we're not inspired by a lot of the founders that we work with.
You were in an investors meeting this afternoon, I think.
Sure, I skipped most of it because of the traffic.
But I am, well, thank you for being here, but I am curious to know, when you looked around the room, were there a lot of women there?
Sure.
Only because we happen to be women, I can ask about, you know, any diversity.
That's true. Yeah. The shocking thing is there's more women in leadership in venture and tech in China than there is in the U.S.
It's not shocking. It's just the way it is.
Yeah.
Why do you think that is?
Some people say it's one-child policy. The whole family, you know, depends on the female to also lead, so the female ends up with more responsibility. I don't know. Some people say it's a factor of economic growth in an high growth economic environment. All, you know, high tide rises all boats.
Yeah.
The other thing I think is interesting is just like when you have a child, like the labor is so much cheaper, and there's just so much more support in China for women.
Oh, interesting.
And I actually think that might be a major component when you have a kid.
Yeah. If I may be so bold, I'd like to throw out a question. It seems a lot of the trend has been kind of like the Chinese entrepreneurship, like community and market has been growing kind of like following the growth patterns of Silicon Valley. And so building off of what you just talked about, I'm curious about what the culture and climate development has been like, especially because the Silicon Valley Old Boys Network, the Old Boys Club, is now starting to come under fire. How has the Chinese entrepreneurship community kind of either gone the same direction or managed to diverge from having those kinds of networks that are closed off form?
Sure. I think China still has a long way to go in terms of a lot of cultural development. Even though people see all of the growth, there's still a lot of work that will have to be done on like management and tech culture, et cetera. To be very blunt, I think China has a lot of, you know, problems with men and women, misogyny, et cetera, but it's kind of funny. I don't think like the Me Too movement has affected China very much. China there's still not a lot of awareness on these things in China.
How do you see the future of blockchain and cryptocurrencies in China?
Sure. I think right now, you know, China, they had like more of a closed economy, and there weren't a lot of ways to like put your money, right? Like most Chinese people had to put their savings in banks, and the banks had like negative real interest rates, and you know, Chinese people just don't have a lot of assets to allocate to for a long time. You know, Chinese people can't like move a lot of money out of the country. There's a $50,000 limit on your money outflow. But Chinese people also like, they love to gamble, and they love like speculation, and they love like new financial products. So a lot of the interest in blockchain in China has been like speculation. People love like having fun with new financial instruments, and there's some intrinsic need due to the structure of the system and the economy of China. But I think a lot of the real infrastructure development is in America, right? So like really creating a great infrastructure to make a scalable blockchain, like pretty much none of that work is being done in China at all. But if you look at like the Bitcoin exchanges and like mining out the Bitcoin, like that's being done in China. So it'll be really interesting to see, like, I think it's still very much unknown how the government will continue to respond and how like the Chinese ecosystem will work. But most of the Chinese people that are really involved in Bitcoin in China are now spending more of their time in Singapore, more of their time in Hong Kong, more of their time in the Valley, because it's just not safe in Beijing to do a lot of the business on blockchain.
I think we'll take one more general question, and then I'll make sure that you all have enough time to talk.
Thank you. My name is Ahi. I have a question about tracking engineers, and you've mentioned about tracking smart people, but how do you actually do it? Is it through your personal relationship, or do you have something special department in your team that does this?
Sure. That's a really good question. It really depends. So let me think about how to answer this question. There's different pools of talent, and we think about how to identify them. So in the beginning, you know, all of the top people who started companies studied abroad, and then because, you know, they wanted to live with their families, they felt like they hit a bamboo ceiling, they wanted to come back to China. And that is very easy for us to track because our founder is so famous, and the team that he built would basically spend time in these universities. We would hire from the universities and get to know all of the people who came back. Now it's very complicated because a lot of the top Chinese founders never studied abroad. Baidu, Alibaba, Tencent have trained people in China. They don't need to go to America to be great engineers and great founders. So for that, we do build a team for spending time with these people, building events and communities with people, like developer networks, engineering networks. We basically have mentorship and boot camp, kind of like YC. So like, you know, we've invested in founders who have IPO'd in New York, you know, and then we have them speak to like people at Baidu and Tencent to engage with them. Hopefully that's helpful. And then I think, you know, in terms of branding, just being a really good brand. So like when founders come, they know like we can partner with them. And we have like a full service model, kind of like Andreessen or First Round, where you have a team of people who are great at marketing. You have a team of people who are really good at hiring. So, you know, sometimes founders, like, you want them to also come to you, and you also want to go to them. There's both inbound and outbound. You have to show that you have a brand and a team that can partner with them so that they feel like they can come to you, but then you also have to kind of engage them early as well. So,
if you had any advice to give somebody who's interested in going into venture capital or angel investing or looking at these future-looking companies, what would you tell them to do, to study, what internships to look for, what philosophers to read?
Yeah, I think good investors would come from any discipline or background. You know, Michael Moritz was like a journalist, and then is the founder of Sequoia. I think the Valley for the longest time really did like engineers, which most of you guys are, and ex-operators, ex-founders, you know. So, you know, if you've worked in a startup, you have industry experience. A lot of people like to go that route and then go into venture. But there are people in the humanities that have also come into venture. I think everybody has their own route. In the past, people have valued like startup experience and starting a company, but now I think people really do care about your track record. I know it might be too much for you guys to do, but like what I've seen more and more is like people who have done a little bit of angel investing or like who have a knack for like really being able to find startups, like venture capitalists, like hiring people who really have that sense of like finding startups and building that kind of instinct. And then when you engage with venture capitalists, if you can show that you can like help them source a deal or help them add value in terms of finding deals, I found like kind of younger people who are able to do that and show that is also helpful for the early stage. Yeah.
I feel like this is like part 1 of 3. It is so fascinating to hear from you. And I have to say that you would not necessarily have been on my radar if it hadn't been for Dion, who is a student last semester. So thank you so much to you. Thank you for your time. I know students want to talk to you. I'm hoping you can stay for another 10 or 15 minutes. We put a link up on the board, so some students will be doing that. But I want to thank you for your time and welcome people to come up to the stage.
Thank you. Thank you.